Welcome to our channel where we discuss everything from crypto to stocks. Today, we're unraveling a phenomenon that's as old as time but has found a new playground in the modern financial markets. We're talking about FOMO, or the fear of missing out, and how it impacts our decisions in the stock and crypto markets. But before we dive in, there's a little housekeeping to do. We're here to share insights and provoke thought, not to offer financial advice. Remember, the financial world is complex and constantly changing, and each investor's situation is unique. So, always do your own research, consider your personal circumstances, and consult with a professional if needed before making any investment decisions. We're all about informed decision-making here. With that out of the way, let's dive into the topic of today's video: FOMO in the stock and crypto markets. So, what exactly is FOMO? Well, FOMO, or fear of missing out, is a psychological phenomenon that occurs when we feel anxious about missing out on rewarding experiences that others might be having. It's rooted in the human desire to belong, to be part of a group, and to enjoy the same success that others are experiencing. Think about the last time you saw your friends posting pictures from a concert you couldn't attend, or when you saw a colleague getting a promotion and you started to question your own career choices. That twinge of regret, that niggling worry that you're being left behind, that's FOMO in action. But FOMO isn't just limited to social events or career choices. It can affect us in a myriad of ways, pushing us to make decisions that we might not have considered otherwise. For instance, have you ever bought a product just because it was on sale even though you didn't really need it? That's FOMO at work, driving you to act on the fear of missing out on a good deal. Now let's take this concept and apply it to financial markets, where the stakes are higher, and the decisions we make can have significant impact on our financial well-being. FOMO can be a powerful motivator in these markets, pushing individuals to jump on investment trends without fully understanding the risks involved. Imagine hearing about a friend who made a fortune by investing in a certain stock or cryptocurrency. The news is all over social media and everyone seems to be talking about it. Suddenly you feel a sense of urgency to invest in the same, fearing you might miss out on a potential windfall. This is FOMO in the financial world, and it can lead to impulsive and often irrational decisions. Now that we understand what FOMO is and how it can affect our behavior, let's look at how it impacts the stock and crypto markets. The stock market can be a roller coaster ride of emotions, and FOMO can intensify that experience. Now, let's delve into how the fear of missing out, or FOMO, plays out in the world of stocks. Picture this: a particular stock starts to gain traction. The price is climbing, and your colleagues, friends, even your neighbor's dog walker, are all talking about the massive profits they're making. It's everywhere on social media, the news, and you start to feel like you're missing out. This, my friends, is where FOMO sets in. FOMO can lead to inflated stock prices, creating what's known as a market bubble. As more and more people buy into the hype, the demand for the stock increases, driving up the price even further. But here's the catch: the price increase isn't based on the company's actual performance or value, but rather the public's perception and fear of missing out on potential profits. This is where the danger lies. Making investment decisions based on FOMO can lead to risky behavior, like buying a stock at its peak price. But what goes up must come down, and when that bubble bursts, the stock price plummets. If you bought at the peak, you could be left holding the bag, facing significant losses. But don't just take my word for it. History is littered with examples of market bubbles, from the Dutch tulip mania in the 17th century to the dot-com bubble in the late 90s. In each case, FOMO-driven investments led to inflated prices, followed by devastating crashes. So, what's the takeaway here? While the stock market can provide significant returns, it's essential to make informed, rational decisions. Don't let FOMO drive your investment strategy. Remember, slow and steady wins the race. While the stock market can provide significant returns, FOMO can also lead to significant losses. Now, let's see how this applies to the crypto market. The world of cryptocurrencies is known for its volatility, and FOMO can make the market even more unpredictable. Dive into the crypto realm and you'll quickly see how FOMO, or the fear of missing out, can drive massive price swings. It's a world where digital currencies can skyrocket in value overnight, fueled by the fear that if you don't jump in now, you might miss the boat. Take the recent crypto boom, for instance. With more and more people becoming aware of digital currencies, the desire to get in on the ground floor has been overwhelming. As social media buzzes with tales of overnight millionaires, it's easy to see how FOMO can take hold. It's a powerful force, driving people to invest in cryptocurrencies without fully understanding the risks involved. But here's the thing about FOMO. It's not just about fear, it's also about greed. The allure of quick riches can cloud judgment, making it easy to overlook the volatile nature of the crypto market. And when the market takes a downturn, those who acted on FOMO can find themselves in a financial freefall. In the crypto world, as in the stock market, FOMO can play a major role in driving rapid growth. But it's important to remember that informed decisions should always guide your investments. Don't let the fear of missing out push you into rash decisions. As we've seen, FOMO can have a major impact on both the stock and crypto markets. But remember, informed decisions, not emotions, should guide your investments. So there you have it, a deep dive into the FOMO phenomenon in the stock and crypto markets, uncovered the emotional roller coaster that can drive impulsive decisions, the significance of comprehensive research and maintaining a cool head. Don't let the fear of missing out fog up judgment. Rather, permit knowledge and comprehension to steer your decisions. Check out our other videos for a deep dive into profitable strategies and investment tips. Be sure to like, comment, and subscribe.